Hey, Bill Sorano from Pittsburgh, and just got home from work here, and I made it home. It's 4:30 Eastern time, so I made it home before the market resets here for the day. Wanted to see. I made the video yesterday showing you a new strategy, and the two criteria for the new strategy for the setup are that the currency has to break through the average daily range. Which this is today. We're on a 15-minute chart, GBPJPY. You can see that the red lines are lit up here, meaning that this currency moved up through its average daily range. Up here on the left, we see the average daily range. This is a 14-day average daily range, is 140 pips. And today, this currency moved 286 pips from this low up to this high. So right here where the lines turn red, it moved through the average daily range. Now that's the first criteria. The second criteria is we need to see an exhaustion candle. I call it an exhaustion candle. Maybe I should come up with a better name for it, but there's some characteristics for this exhaustion candle. First of all, the exhaustion candle, if the currency moved up through the average daily range, then you're looking for a large bullish candle. You're looking for a very large bullish candle telling you that the move is exhausted and that there is a high probability that it will reverse in the short term so that you can make some money. Now, the characteristics of this exhaustion candle are that it has to be at least 50 pips in length, and that's counting the wicks, the body and the wicks. It has to be at least 50 pips, or for the currencies that don't move that much, it has to be at least 50% of the average daily range. So in this case here, the average daily range is 140. Half of that would be 70. So 50 pips would be fine for this currency. Now, GBPJPY. Now what you see is it moves up through the average daily range is broken right here. Here's the red lines. They turn red once it's broken. Right? If you look at a currency here that didn't break, like this one here, these lines haven't turned red because it did not break the average daily range for today. Average daily range in dollar yen is 71, and today it only moved about 40 pips in any direction, one direction or the other. So it moved up through the average daily range was broken, so now we need an exhaustion candle, and we just don't get one here. As you can see, we just don't get one. We get a candle here that looks a little bit like an inverted hammer, but we're looking for a bullish candle that's at least 50 pips in length, and that'll give us the signal to take the trade on the next candle, and we just don't get it here. So as you see, and you see what happens, it just keeps moving up. It comes up to here, corrects a little bit on a 15-minute candle, but then it just keeps moving up. Also, remember in yesterday's video, I talked about how some trading systems will tell you that once this average daily range is broken, you can use these crosses here of the 5 and the 13-day moving average to get in. And I told you yesterday that's just not a good strategy. It doesn't work very well. And as you can see right here, this arrow signifies the confirmation that the yellow line, which we call the mustard, the 5-day moving average, did in fact cross down below the red line, or the ketchup, which is the 13-day moving average. And if we would try to short that there, we would just lose money because it just keeps going up. Same thing happens right here, right? Right? And then, of course, you get a cross right back to the upside. Again, cross down, cross up. And so it's just not a good trade to take. So a lot of these currency pairs did this today. They broke through the average daily range, but you don't see an exhaustion candle. This is NZDJPY. Again, breaks through the average daily range, no exhaustion candle, right? GU breaks through the average daily range, again, no exhaustion candle, right? you see breaks down through the average daily range. This is almost an exhaustion candle here. Since the average daily range in USDCHF is only 51 pips, you would only need a candle of about 25 pips or 26 pips, and that's just a little bit short. Okay. The one currency that did offer a trading opportunity today was GBPNZD right here. This is GBPNZD is one of the currencies that moved the most. You could see the average daily range is 175 pips. Today it moved 218 pips. Okay, so this one moves the most. So it comes down here, it breaks the average daily range, the lines turn red, and then right here we get an exhaustion candle. Remember, we're looking for a candle 50 pips in length. This candle is 86, almost 87 pips. So that is the exhaustion candle right there. That tells us to get in on the next candle, right? Go long, and boom, we get our 50 pips within an hour, and we're out of that trade with 50 pips, right? So we risk 25, right? And there was really no risk there because it opened right here and it just went right up from there. So right here, we're in 15 minutes, 30, 45, 1 hour, and we're out in about an hour and 15 minutes. 4 15-minute candles, we get our 50 pips, and we're good for the day. So that's the trade right there. A lot of currencies today did break their average daily range, but only one offered a valid trading opportunity with the exhaustion candle here, right here, and then you would get in right there and get your 50 pips and get out. Okay, so again, this is Bill Soriano from Pittsburgh. It's Thursday, November 1st, about 4:38 p.m. Let's make it a great day trading Forex. Any questions? Just contact me in the group. Send me a private message. If you're watching this video on YouTube, just click the link to join the group. Send me a private message, and I can answer any questions you have.